Abhishek is saying, Dean, can you tell a little bit about status quo time frame? Okay. Again, I would suggest you to go and watch the FAQ library. There are some wonderful videos on time frame, detailed videos, and you will be able to understand the concept. Also, go to the YouTube and watch the dominant time frame video. Now, to understand status quo time frame, you need to understand that there are 3 time frames basically. Okay. Now, what Jim did in his book Markets in Profile is he talked about different time frames. So he starts with scalpers and he goes on till investors and everything in between. I am an ardent follower of Jim, so there is absolutely no question that this is extremely useful. But then what I found is that it really does not matter, okay, whether your time frame is scalper or not, or if you're an intraday trader. Sometimes the trade you take is just a scalp, right? You're not getting more profits than a scalp. Sometimes you're a scalper, but your runners can run till the last tick of the day because the market is trending in unidirectionally. So what I said was, instead of fixing the time frames between scalpers, intraday traders and all, depending on the objective, why not look at the markets, okay, in slightly different way and try to find out what the time frames are basically trying to do. Okay, so what he says is that intraday time frames will try to maintain the range, okay, that the market is trading in. So that's why I said that, okay, this is yesterday's high and low. We are inside yesterday's high and low, and intraday traders will like to keep it inside yesterday's high and low. So if market goes near the lows, they will buy. If market goes towards the highs, they will sell, and they will keep trading in between. So what I said, why look at fixed chart periodicities like yesterday's high and yesterday's low? If the market is trapped within a smaller range, then what? Okay, so what I then said is, instead of naming the time frames in terms of intraday, scalpers and like that, I said let us have 3 general time frames. The one that is controlling the market right now is the status quo time frame. It will try to maintain the status quo. One smaller will be exhaustion time frame. It will exhaust the higher time frames, and that will lead to inventory adjustment, breaks and rallies. And then there is this discovery time frame, which is responsible for breakout of that range. So let's say we are stuck in this range. So I will come to the market. I will not look at what time of the day it is or whatever. It might be a daily chart, weekly chart, anything. You find a range. So this is the range right now I'm interested in. You can even draw this and make it a smaller range. And now if you look at it, this was the low of the range. Market comes here. What happens? Buying comes in. Market is pushed away from it. Market comes here again. Buying comes in. A market comes here again. Buying comes in. What is happening? So this range is being maintained. So whenever we come near the lows, buying is coming in. So status quo time frame is in control. What that immediately tells us is that if these guys are in control, market reaches the top of the range, supply is likely to come in. See, here the supply came in, again you're coming here, looks like selling is coming in. I'm not really sure whether it will be able to push the markets lower, but yes, some supply will come in. Okay, so now you know that this range is going to be maintained, and if you want a bigger trade, now you can take smaller trades, like you can buy when the market is coming near the lows and sell when it is going near the highs, and keep a stop loss just above the high or just below the low. Or you can look at VWAP and you can see that it goes above VWAP, pulls back and goes back up. I will buy here. Okay. So you can take all these intraday trades. In the meanwhile, if it goes to one of the extremes, now we expect the status quo time frame or the time frame which is responsible for this range to sell. And let's say this market, instead of getting rejected at the extremes, okay, instead of getting rejected, it just trades here, or it just breaks through and starts accepting above. What it tells me is that this is unexpected behavior. Status quo time frame is now no longer defending this range. And as soon as I know that, what opens up? The next swing high opens up. If this also goes, what opens up? The next swing high opens up. Make sense? Because now, if this range is broken, this top is broken, now this top comes into play and this range becomes a bigger range, right? If this bottom goes, then it will become this range, a bigger range. If this also goes, it will come to this range. So the status quo time frame will keep changing and the scope will keep changing and their objectives will keep changing, but the logic remains the same. All right. So now this same logic, this is a 3-minute chart. Let us go to a daily chart. And now again, you can see we had this range, and you can see every time we go to the top, selling comes in, bottom buying comes in, and now we break out. Okay. And as soon as we break out, now we know that, okay, this is the expected behavior is to get resisted here. We are not, we are going higher. Unexpected behavior, higher time frame or discovery time frame has come in to push the auction above this, right? And now again at some point in time you'll get a sideways range, again you'll get a sideways range, again you'll get a sideways range, and as soon as it breaks out, you know that discovery time frame is coming in, and as long as it is within the range, exhaustion time frame will keep causing trouble. So you can look at some bigger ranges. You can look at this range. Okay, you can look at this range. This is a bigger range. All right. So all the internal swings are caused by exhaustion time frames. So here also the same logic. Let's say if you are looking at this range, this selling, this buying is coming from status quo time frame because it is trying to maintain the range. This big breakout, discovery time frame, and all this that is happening within, that is exhaustion time frame. So this is how you can easily monitor the markets and not get trapped on the wrong side of the discovery time frame, which is the objective here.